Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is the 29th, a Thursday. Typically we would see export sales released today, but those have been pushed back until Friday. Today we did get ethanol numbers out, but before we get into those, let's just take a look at where the market closed. Corn down 2.25 cents. Soybeans a little bit higher on the day, only closing up 1 cent after trying to extend the gains that we saw yesterday earlier on in the session. Was unable to do so, finishing up only a penny higher here. Wheat moving lower again. The bottom line here is that corn continues to trade lower with planting mostly wrapped up. Attention is really being shifted over to emergence and the growing and the fact that we have good positive weather, good moisture moving into the Midwest. You know, I think the markets for the most part looking at that and saying, well, this is a pretty darn good start to the crop. When you look at soybeans, we have a snapback, but that seemed to be for the most part limited by the fact that planting pace is also no longer a significant concern. Of course, we will see some planting delays in North Dakota and Minnesota until Tuesday, but on the whole across the nation, we don't have the kinds of concerns that we did earlier on. And I think for the most part, you look at soybeans, and that's one of the reasons why we haven't been able to snap back and continue some of the small gains that we saw yesterday. Wheat is continuing to focus on global stocks. The bottom line here is that we have ample global stocks. Of course, the reason why we ran up here in wheat is because we had production issues in southwest Kansas. With those for the most part baked into the pie, you look at the overall supplies of wheat across the global market, and it looks as though there's ample wheat. A lot of the production shortfalls that we'll see here in the U.S. are going to be offset by higher beginning stocks here in Europe. So the bottom line here, there's plenty of wheat on the U.S. market or on the global market, and really the prices that we've seen in wheat have, with them having rallied significantly, it really priced out U.S. wheat on the market. So U.S. wheat prices moving back in alignment with trying to get more and more competitive, really still unable to be competitive on the global market. When you look at the corn futures, we have traded lower here. Now, the fact that we have traded lower has allowed an opportunity for basis to increase, and this should be very positive for anyone out there trying to still sell old crop corn and that has a basis contract. If you did lock in some sort of basis contract, this is something that this sort of market environment may be something you'd like to take advantage of while prices continue to be depressed from their lofty levels that we saw a couple weeks ago. You'll notice that Columbus, Nebraska jumped up really 7 cents here just yesterday. On average across the U.S., we've seen a 2-cent improvement, and so this really seems to be an overall broad trend. We have seen corn basis continue to improve really over the last couple weeks, and really yesterday at some of these key areas, we did see a bit of a bump there in basis. Where we've seen the biggest moves here in the last week has been along the river. On average across the U.S., along the river, we've seen basis improve about 4 cents this week alone. So very strong along the river. Now, we talked about ethanol numbers. They did get moved out here, or they did get released today. We saw production up about 2,000 barrels per day last week, averaging about 927,000 barrels per day on the week. We have seen ethanol basis improve about 2.5 cents. It's nowhere near the strength that we're seeing along the river, but it is a nice bump there for ethanol basis. Now, basis crush margins or ethanol crush margins have been relatively low here, averaging about $3 per bushel in eastern Iowa last week. We're expecting crush margins to be finding a bottom here around $3 per bushel. One last thing to talk about is export sales. Of course, that was supposed to be released here today, but it will be released here tomorrow. Expectations there for wheat for the old crop is between 0 and 200,000 metric tons. For new crop, we're seeing expectations between 200 and 400,000 metric tons. For corn, we're seeing old crop expectations between 300 and 500,000 metric tons. For new crop, between 150 to 350,000 metric tons. And soybeans. Now, this is the area where I think we could see this news come out tomorrow. I think this could drive the market a bit. We've been expecting to see cancellations. We really haven't seen a significant amount of cancellations out of soybeans here. Expectations for old crop is anywhere from cancellations of 100,000 metric tons to additional sales of 100,000 metric tons. So if we come in on the high side of that, we need to see cancellations here for soybeans to get more in line with what the USDA is currently projecting. If we don't get cancellations and we do in fact book more sales for the old crop, we may end up seeing a situation where the USDA has to revise their forecast, and that would be another bullish scenario here for soybeans. On the new crop, expectations for sales there for soybeans between 500 to 700,000 metric tons. Other than that, guys, that wraps up today's show. If you have any questions about what I talked about, give us a call at 877-472-4607. Remember, you can take a demo of the mobile trading platform or the desktop trading platform at grainhedge.com. Just put your name, your email number, and your phone number in the top left-hand corner, and of course we'll get in touch with you, make sure that you feel comfortable with the platform, both downloading it and customizing it to your own trading styles. Thanks a lot for tuning in, and we'll see you here Friday for the weekly wrap-up.